Hello, everybody. It's Randy Selzer here. Welcome back to my YouTube channel and welcome back to the podcast. Today, we have another very special guest. Jason Henneberry is visiting today. He's with us from Victoria, BC. Jason is in the mortgage business and he's with a company called Fundible.ca. And so welcome, Jason. Nice to have you on board.
Yeah, thanks, Randy. Thanks for having me on the show. Appreciate it.
No problem. It's a real pleasure to meet you today. Maybe I should mention that you and I were actually introduced by a mutual friend of ours. That's Robinson Smith, who's been on the podcast a couple of times. And Rob's a great guy. He's rapidly becoming famous, I fear. His head's probably swelling up because of the Smith maneuver, something that his dad started. And Rob has published another book. And it's a very clever way for people to make in Canada, to make their mortgage interest tax deductible. So thank you, Rob, for introducing me to Jason. And I look forward to a long friendship, my friend.
Yeah, right on. And I think you're right. I think it tends to go to his head. So we got to be careful about that. But Rob's a pretty good guy and definitely appreciate him putting us in touch together. Actually, I've been in the mortgage business for like 19 years now. And one of the very first things, like when I was advising homeowners on mortgages, one of the very first strategies that I gravitated towards was the Smith maneuver. And we put a lot of people through seminars in like 2006 and 7. It was quite the thing. We had like bus ads and radio ads and TV ads, flyer drops, and like people came from all over the place to tune in to like hear about the Smith maneuver strategy. So it's pretty cool that Rob's kind of revived that with his new book, and it's gaining a lot of traction, and he's done a really good job at sort of modernizing the strategy.
Yeah, he's really on fire right now. It's just amazing. Yeah. So I should tell you a little bit about myself. As a background to what we're going to talk about today. I am a practicing realtor. I'm still selling real estate here in the Greater Toronto area. I've been doing it for 28 years, and I'm involved with offers all the time. So I have a lot of background with offers, and I'm sure you know, both in BC and here and other parts of Canada, these days, almost every offer is in a bidding situation. It's a bidding war on almost every listing. It's just crazy. I've never seen anything like it. Typically, when I'm working with a buyer in this kind of market, you have to explain to them, because they're all pre-approved. Any realtor worth their salt is going to make sure that their buyers are pre-approved. But sometimes you have to explain the concept of pre-approval, what it is and what it isn't, because it's actually a two-step process. The bank will pre-approve a buyer based on their income, based on their credit report and other things. And that pre-approval is for a certain amount at a certain rate. But that's not the end of the story, because if the buyer buys something successfully, the bank also, the lender, also has to approve the transaction. And where we get into trouble sometimes is if you're in a crazy bidding war with 20 other people, sometimes people get carried away and they pay a lot of money for a property. And what they don't understand is that the bank is going to send out an appraiser after the fact to take a look at that property, to make sure a couple of things. Number one, that it really exists, because banks get audited too. They have to be able to prove to their shareholders that they're loaning money for a real transaction on a real property. But they also check, and the appraiser does this, other sales in the neighborhood to make sure that the buyer didn't pay too much. They didn't get carried away. And there's a very real risk to that. Even if they're pre-approved for themselves, the transaction also has to get pre-approved. So most realtors I know will make sure that they've explained this to the buyer before they get into any bidding war. There's still an element of risk, because if the bank says, no, you paid too much based on our appraisal, you paid more than it's worth, then what the buyers have to do is they have to pitch in extra money to bring it up to where the bank says what it's worth. And that's something that a lot of people are not prepared to do. The bank may say, well, you paid $100,000 too much, so you have to put down that extra $100,000 on closing day if you want to get the loan. Correct?
That is all 100% correct and accurate. The valuation piece is really just one side of that story, though. I think a lot of people don't realize that when you get a pre-approval, you're really just getting, and it doesn't matter what type of financial institution. It could be a bank, it could be a non-bank lender. Right. All lenders in Canada do the underwriting of a purchase after you have a firm agreement, a firm purchase and sale agreement. And so when people are, quote unquote, pre-approved, what's really happening is either the the bank representative at branch or the mortgage professional that's, mobile, or a mortgage broker even, everybody is just sort of reviewing the documents and aligning them with the bank's policies and saying, it looks like it's a fit. But the banks operate on lean margins for mortgages. You can imagine lending at, 1.5% to 2.5%. There's not a lot of money in there. And it's an expensive process to underwrite properly. And so banks can barely get their head around the economics of the deal in the first place, let alone actually underwriting home buyers before they write an offer to purchase. And so this is a huge distinction. So the person who's reviewed your files is not actually the underwriter. And so there's so many things that go wrong.
Yep.
In a purchase. And it's not just the value. It can be that the lender, the underwriting center, sees something in your payslip that doesn't quite align with your tax return, and they start asking questions and look for additional documentation, and you don't have it. Or, there's all kinds of things that can add stress to a purchase. And I think a lot of people aren't aware of that. They think I'm pre-approved, so I'm 100%. That's not the case.
They don't see it, that behind the scenes, after they purchase something, if they're dealing with a mortgage broker, there's a lot of stuff that takes place behind the scenes. You're absolutely right, to sort of verify everything, to make sure everything lines up, and to make sure that they didn't pay too much money. So yes, when that final approval comes through, man, it's like a cause for celebration behind the scenes, whether the banker, the lender, or the mortgage broker is handling it. It's a huge sigh of relief that, yes, it's done. However, okay, so when I first heard about your company, Fundible.ca, and that's Fundible spelt with an I, Fundible. I read, I went to your website and checked you guys out, and there's a very interesting concept that you've come up with here. And correct me if I'm wrong, but my understanding, having read it through a couple of times, is that you guys are providing a way that basically underwrites or guarantees the transaction.
That's right. So what we did,
I'm a little slow, so it takes me a while.
No, you're totally nailing it. I mean, if real estate doesn't work out for you, there's work to do on the side of the balance sheet.
The only thing I know what to do is real estate. Anyways,
good. So that's exactly it. So we looked at it and said, okay, well, what are the critical steps? Because there's a lot of stress in the process. You said it, like when that approval finally comes through, it's cause for celebration. You know it as a real estate professional. We know it as mortgage professionals, and home buyers experience it real time. It's their deposit. It's their personal financials that are at risk. The advisors carry a fair bit of liability in terms of, fiduciary responsibility to advise the home buyer as to the right steps. And in the past, that's always included, hey, let's make sure we put, 7 or 10 days into the contract to make sure that you actually have your financing approved, or let's get a home inspection, all those things. Because of market demands, if you want to win the bid for a home, you really can't put those things in a purchase contract. And so, but those things are there to protect the home buyer, and they no longer exist. Not anyone's fault other than we just are in a very busy market. So what we did is we said, well, how can we bring that confidence and that safety, that security back to the home buyer? And we realized the only way to do it is take those steps, those underwriting steps, those critical steps that the lenders only do after you have a purchase contract. And can we put them at the front of the process? Can we actually underwrite a borrower fully? Can we underwrite a property fully? Can we do it in an efficient way, like fast and cost effectively, so that we can say, hey, you are 100% approved for this, and you can go ahead and you can write a financing free offer on that property, and you know exactly how much mortgage you're going to get before you even know whether or not you have the property under contract. And what that does is it creates a lot of confidence for the home buyer, so that they can make that offer, and they're not sitting there for 5 or 6 or 7 days wondering if the bank's going to approve them after they're contractually obligated to buy that place, whether the bank approves them or not. And so that's where the idea for Fundible came around, is can we bring that confidence back to the market? And I think we've done that.
Well, that's very interesting. You are so right. In the good old days, there was always a condition on finance and often a condition on home inspection. But the finance condition, especially it used to be 5 days and then it was 3 days. But nowadays, you can't have that in there. If you're bidding even against 3 different people, if you have a finance condition in your offer, 99.9% it will be rejected, because from a seller's point of view, they don't want to take that chance that, well, what if they don't qualify and then they've turned away the other offers? And so they're not going to put themselves at risk. When you're a buyer in a bidding war, you must go in firm. And so, yeah, tell me more. This is very interesting. And I liked something you just said now in a time when you mentioned that it can be done quickly in a timely manner, because this is so important. When you're a realtor and you've gone out and you showed some properties to somebody today, and let's say the offer date is tonight. I mean, they don't have a whole lot of time to get this organized. So how does that work with your company?
So what we do is we make sure that we're approving the buyer in the process, early in the process. So,
right.
Let's say they want to buy a place for $1 million, and they haven't found that place yet, because when they go shopping with you or another realtor, Randy, like you said, it could be Thursday morning and you find a place and there's going to be multiple offers later that day or the next day.
Right.
And so what we want to do is make sure that all the buyer qualification is done in advance, so that we're just focused on the property when you find it. Makes sense. We review the buyer's application. And really what we're doing there is we're not trying to actually be the lender. So this is an important distinction. What we're trying to do is provide confidence in the deal. And we just want to know where the mortgage professional is planning, like what the funding plan or the financing plan is for that home buyer. So the home buyer can work with any lender they want. It can be any lender, as long as, so what we're doing is we're underwriting the financing plan and we're putting a confidence rating on, does that buyer actually qualify for a mortgage with that institution? And if the answer is yes, then we approve the buyer. And then you go shopping as a realtor. And when you find that property, say it's Thursday morning and you want to write Thursday night, we have some innovations where we're able to do an appraisal evaluation of the property and turn it around and sign off on that property on the same day. Our service agreement is 24 hours, but in a pinch, we can do it in 6 business hours. And that's huge. That took a long time to figure out, because I don't know. I mean, you open the door for a lot of appraisers. How long are you experiencing that it can take like up to a week to get an appraiser into the property, right?
Or more. Yeah.
Or more.
Yeah.
Because they're busy.
Yeah.
And so that was an innovation that made this possible. If we weren't able to turn these approvals around fast for our realtor partners and our buyers, then this product wouldn't work. So that's a big part of making this work for everybody.
That's very interesting. So if I heard you correctly, what you're saying is that a buyer, if they have a good relationship with their bank, let's say they're with TD Bank, and they've gotten a pre-approval from TD Bank originally, but now they're coming to you. If they want to get a new mortgage with TD, that's okay. Basically, what you're selling is like an insurance policy, sort of, which insures them and the transaction. But you
got it 100%. That's our model. And just like life insurance or any other type of insurance, you're paying a small premium to have the protection and the benefit in place that you may never use. So we know that you're most likely going to get your mortgage with TD Bank or Scotiabank or whichever lender you're working with.
Sure. And
what we're doing is we're charging a small fee for doing those steps in the process that the bank's not willing to do, or I should say financial institution, because, or it's not just the banks, it's all lenders, but we charge a few $100 to review the application, and we charge a small fee depending on the size of the loan that you need us to hold. And we put money aside on a one-to-one basis. So if you need a $500,000 mortgage to guarantee that purchase, we're putting that aside for you for a period of time while you go and make sure that you're 100% with your primary financial institution. And as soon as you have that mortgage locked in, you release us of our commitment to fund. But if something goes wrong, and that lender doesn't pull through for some reason, they don't like your documentation, they don't like the property, you've seen it, Randy, there are thousands. Then we have a backup mortgage that we're committed to advancing to make sure that we can close that purchase for you. So your deposit's protected, your family financials are protected, the whole thing.
That's amazing. So you say it's a small fee for this insurance, basically. Are we talking like $1,000 or $5,000 or a few?
It's going to depend on the market. So we charge a $259 application fee, and that covers the valuation of the property and our underwriting. So that's step one.
That's it.
So no, there's a second step. So all borrowers pay the $259, and that allows us to do some digital verification of ID, accessing tax documents to verify your income. We underwrite those items, and we give you we include a valuation of the property in that. And check this out, though. So once we've approved the property, you can now, as a realtor, go and write a financing free offer. And we actually enable you, like if you see value in it as a realtor, you can put in the offer that the financing isn't just it's not just pre-approved. It's been certified by Fundible. So it's a step better than going in without a condition. It's saying, because you've got financing conditions, which you can't put in a contract anymore. You've got blank, which is what a lot of people are doing, which doesn't help the parties qualify the deal. Like the selling realtor and the seller, they can't make sense of a blank offer. They don't know. But if you've done that extra due diligence and it says this purchase has been certified by Fundible, it's financing certified, then that should help differentiate your offer. And now you're competing on a whole other level. You're no longer competing just on price. You actually have, the seller sees it as that is a better offer on paper than an equivalent one that's just blank.
That's a great idea. That's like, so you put a clause in the offer stating that basically it's been certified. It's guaranteed that the funding is there.
Yeah.
Wow. I like that.
Yeah.
Okay.
Okay. Now we're talking, right? So check this out. So not everybody wins the first bid, right? Yeah, how many times have you written more than
many
on more than one property?
Come back with an improved offer. Okay.
Yeah. Yep. Or you don't win that property and you have to go
next property, right?
Next property. So in talking to realtors, I've learned that, some realtors are, having to write 5, 6, sometimes 10 or more offers on different properties.
Brutal.
It's brutal. It's not great. And I think the work that actually, total sidebar, but I think realtors are working way harder for the money you earn. And I'm just going to throw that in there because I don't think a lot of people appreciate how hard your industry is working right now. It's literally 10 times more work to help someone buy a house than it was 5 years ago.
Yes, it is. And I don't know what the statistics are. I'd like to know on average, how many offers do buyers have to make before they finally get one that works? It'd be interesting to know that because it's tough. And especially, and it doesn't seem to be slowing down. I mean, COVID did nothing to it. I'm sure it's the same in BC. It's like a global pandemic, but people just ignore it. It's like, okay, let's go buy another house. No problem. We're in a global pandemic. It doesn't matter.
Well, values appreciate. I feel wealthy. I'm going to go buy a second home.
That's right. That's right.
or let me get one for my kids before it's too late.
Like, a lot of that. There's a lot of that going on. So that's a fantastic idea, Jason. It really is. And,
well, I just want to finish that one point because
sure.
Sometimes I get going and I don't want to. I want to make sure I don't have to circle back. But that 259, if you don't win that first property, we'll do an evaluation on 2 more properties, no extra cost. So we'll appraise up to 3 properties in that process to help the home buyer, find the home that they're actually going to win the offer on.
So you only have to pay the 259 once, up to 3 houses, up to 3
houses. And if you're unlucky and you need to write on a 4th property, we just charge $99 to do the next one and the next one.
That's great. I mean, that's very, very affordable for sure. Wow.
So that's the first part. And then it helps you differentiate your purchase. And then the second part is everybody needs a different guaranteed loan amount. Some people are buying $1.5 million property and need $1 million. Other people are buying an $800,000 property and need $400,000. So what we do is that first part is just to get the approval. And then we say, okay, you're good to go. You can write a financing free offer. And the home buyer, as part of that process, has let us know, the target purchase price, what they expect to pay, and also how much of a mortgage they need us to guarantee. And so we'll guarantee up to 80% of the value of the property. And they pay at 10 basis points for that. So the math on that is if you need us to hold a $400,000 mortgage while you're doing your due diligence elsewhere, it's a $400 cost. And we put that money aside for 2 weeks, which gives you lots of time to get your mortgage secured at your main bank. And if for whatever reason you're hitting headwinds and you need more time, it just automatically extends for another 2 weeks for $99. And so it just keeps getting pushed down the line until you say, hey, I'm good over here. And you release us of our obligation to give you a mortgage.
Well, I got to say, those prices seem very reasonable when we're talking about house valuations today or condo valuations. When you're looking at, north of $1 million almost all the time for a house, $259 plus a little bit more here and there. That's nothing, really.
Yeah.
It's great. It's a great idea. Now, you guys are in BC. I read on your website that this program is available in Ontario and Alberta.
It's funny. I live in BC, but we're launching the product officially in March and available in Alberta and Ontario only to start. So we intend on bringing it back to BC later in the year in 2022.
Okay, but right now we're doing this. Actually, it's February the 1st. It is available in Ontario, so consumers can get this program right now in the province of Ontario.
Yeah, correct. As of March, actually. So.
Oh, as of March. Okay, so
we're just
so
dotting the I's and crossing the T's.
We're breaking news here. This is great. So this is something new for the Canadian real estate industry. I think it's fantastic. Yeah. I love it. Where do we sign?
Where do we sign? I know I'm getting a lot of that, actually. We've had a lot of realtors and
I'll bet you will.
Professionals reach out wanting to learn about it.
Well, again, this is something that's usually behind the scenes, and most consumers are not aware that there's a lot of sort of intricate things that take place after the fact, after you get that winning bid in on a house or a condo. And it's not always a straight line to get your financing in place, even if you are pre-approved. But this is great. It's like a small premium that you would pay on an insurance policy, which basically guarantees that funding is going to come through.
Yeah. And one of the things that we're seeing realtors sort of gravitate towards for their buyers is there's a variation of this, which isn't just on the buy, but it's like a buy before you sell, because a lot of people want to transition from one home to another.
Right.
But they're not ready to go and write an offer on a place because they know in the back of their mind that to qualify for a mortgage, they need to have a firm sale on their existing house. But if their existing house is reasonably nice, they know that as soon as they put a for sale sign in the ground, it's going to go. They don't want to be homeless. So it's like chicken or egg. You're probably seeing that a lot.
Every day. This is the biggest problem right now, whether you're upsizing or downsizing. Everybody knows that the minute they put their house up for sale, it's gone. You know, they put an offer date for next week, it's gone. It's pretty well it's a certainty. So people are very nervous. They don't want to do that because they also know on the other side of the coin, when they're out looking, let's say they're downsizing, they want to sell their big house and buy a smaller one. They know that they could get stuck in a bidding war and they may not get the first house that they want. So if they sell their big house first, even with a long closing date, there's no guarantee. And you have to tell them the truth. I mean, it might take several offers on several different properties before we come out on top because it's so unpredictable, other than the fact that it's going to be crazy. And so that's a very interesting thing as well.
Yeah. And a lot of those people, I mean, there's a certain demographic that's comfortable writing an offer, knowing they haven't sold their house yet. That's fine. But there's a lot of people that don't want to pull the trigger on writing an offer because they haven't sold. And so what we do is we look at the whole thing, we look at it holistically. And so we say, look, okay, we're willing to approve you for 100% of the money that you need for the purchase. So we'll give you that assurance that we will close on that, even if your house doesn't sell, which is different than bridge financing, Randy, because bridge financing, you need a firm sale agreement in place.
Yes.
The dates might not line up on the two transactions. And so the lender says, no problem, we'll give you that mortgage and we'll bridge the gap.
Right.
Well, that only works if you have a firm purchase agreement and you have a firm sale agreement.
That's right.
But what we do is we basically are giving the home seller, the seller buyer, an option contract. We're saying, we're willing to do these things. We're willing to put a mortgage over here and we're willing to bridge the difference, even though you haven't yet sold your place. You haven't even listed it for sale. Here's the fee. We just talked about those costs, so I won't go back into it. It's the same. And we give that assurance. So now the seller can say, okay, I know I'm not going to get, I'm not going to put my family's financials at risk. I can go and write those offers. I can win the bidding war. And then as soon as I have a property under contract and I know where I'm moving to, my realtor, Randy or other, can list the house. And I know it's probably going to sell. And this is back to the insurance piece. Probably you're not going to need us. And as soon as you put that for sale sign in the ground, it's going to go. And then you release us of our obligation because now you can work with your main lender because you have the agreements. You can get all the bridge financing that you need. Right. So we're seeing that as just a real helper because we're not going to single-handedly solve this problem. Don't get me wrong, but we have a liquidity issue. We have a supply issue, and there are people that want to sell their home, but they don't want to do it until they've bought a place, and they can't buy a place till they get the mortgage. So if we can help that transaction, then maybe we can get some more listings on the market, and maybe that helps. So I know the government's working on like legislation to solve some of these issues, but I think product innovation is what we actually need. And we're seeing different things pop up. It's not just us. And I'm really hopeful for the space from that respect. But I think that's like one of the big issues is let's solve the supply issue.
Well, I got to tell you, I'm impressed, my friend. I really am. I think it's a fantastic idea. Why didn't somebody else think of this? Jason, you're an innovator, man. This
Thanks,
is
man.
great.
Appreciate it.
Yeah.
Maybe we should hold off on releasing this so I can actually get my product in market before someone else steals the idea.
It's too late now. This is going
There,
out on the internet, and everybody's going to see it. Let me tell you, it's too late to back out now.
Right on.
So, no, I really appreciate this. And this, I think you're going to find realtors across Canada are going to be asking for this, because it just makes it takes away that risk. You know, it takes away the possibility that something could go wrong. I think it's fantastic. I really do. For $259 plus maybe a little bit more, that's nothing. Today, you know, cost you $259 to fill your car up with gas practically.
Man, or go out for dinner. Yeah. If you
I know.
Family of four going out for a meal, for sure.
Yeah. Well, the restaurants here just finally reopened today. They were
today.
Okay. And at 50% capacity. So, and that's just, it's not the same. I mean, I'm sorry. I'm so done with COVID. I've had enough. I think
a lot of people are. There's a lot of people that are done.
But you go to the restaurant, maybe we'll go this week just to check it out. But I mean, half the tables are gone. So you got all these spaces between the tables. Your server comes over to you with a mask, wearing a mask. And I'm pro mask. I mean, we got to get through this, right?
Yeah.
But it's just not the same. I mean, part of it's a social experience. You want to go into a place where, you know, people are chatting and talking and it's a nice atmosphere, but hopefully we'll be through this soon. It certainly has not slowed down the real estate market though. And I know in BC as well, because my daughter actually lives in North Vancouver. So we got some close ties.
Yeah. Right on. Awesome. Yeah. Well, maybe if you're ever out in this neck of the woods, we'll get a chance to shake hands face to face. So.
Anytime. Although after COVID, maybe everything's been on hold for 2 years now.
Maybe a little bit yet. Still.
Yeah. And Victoria, I've been to Victoria, and we did that drive from Victoria up to Nanaimo. It was a beautiful drive. It was in the summer, sun was shining. It was just gorgeous.
Okay. Well, so I'm just north of Victoria, but I'm exactly halfway between Victoria and Nanaimo.
Oh my goodness.
Valley, and we live on a little lake called Lake Quamachin. So if you've done that drive, you've seen the rolling hills and the farm field. That's kind of where we are. Yeah.
A friend of mine moved up to, now he's a little extreme. He moved up to Comox, like way up somewhere. I don't know. That's like
Courtney Comox. Yeah. It's another hour and a bit past Nanaimo.
My goodness. Well, it's a beautiful province. Absolutely. But this program, sir, I think this is going to take off for you. I think it's going to catch on fire because once realtors find out about this, they're going to want it. And not just in Alberta, Ontario, and BC, but I think you're going to find across Canada, they're going to be demanding it or asking for it. So,
well, we certainly hope so.
Yeah, no, I don't see any negative here. I mean, it's all positive. It takes away a huge risk that most people are not even conscious of from a consumer point of view. But we're aware as realtors, we know that there is a risk there. I think it's fantastic. Really?
Yeah. And I don't know how much time we have left, but I'll just share just the whole consciously aware.
We can talk as long as you want.
Well, I'll tell you where this idea came from. I bought a place. My wife and I bought a place a year and a half ago, and actually we wrote the offer. It wasn't a year and a half. It was just over. I guess we're coming up on 2 years now. We wrote the offer just before COVID hit on a vacation property.
Okay.
And we were set to close in April. Okay. And so now I know my business. I know I qualify for a mortgage. I'm a mortgage broker. So, we know how to do this for ourselves. And, those types of events, you never know where things can go sideways, but our world sort of came to a bit of a grinding halt for a while. We were very fortunate. Our industry was very fortunate to boom through COVID. But there was a 3 or 4 month period there where we just weren't sure what was going to happen. And there were, because it was a vacation property and it was a little bit remote, and then the market was shifting and so on. So we were committed to this purchase. And it wasn't clear to me that we were actually going to be able to close on it because the lending options started shifting. Policies started shifting. So things like that happen. And I've seen that happen many times in my career where and you see it in the news, like federal government's implementing new policy changes, and that's like every couple of years. And these policy changes are real. And so when that happens, you've got buyers that are in the market they think they're getting a mortgage, and then those policy changes hit. And for the most part, it's okay. Most people make it through, but there is a lot of shifting and dancing. And so for us, I wasn't sure how our story would end up. And the whole time I was thinking, man, what I would pay to just know that I can close. That's what happened, because we were stressed for a while. And so
huge stress,
which was, it turns out it was a good thing. We ended up closing on the property. So that's all good. But through that process, I was like, why can't I just know? Why do I have to wait? My approval's in. The lenders are like, well, look, we're not sure exactly how we're going to treat this area. And so it's, and I know what I'm doing. And maybe it's a fact that I know too much, and we're on the inside. So we know how bad things can get for people. And maybe ignorance is bliss, that you're like trusting your advisor on the other side of the balance sheet. But so I figured, if I'm willing to pay and I'm the professional for my own mortgage, then there has to be a world where we can bring confidence to, the everyday consumer.
That's a great story. It really is. And for any consumers, and I hope there's many of them listening to this today, always try to go for a shorter close. A short close is much safer than a long closing where you're months away, because you're absolutely right. There can be policy changes. Things can change overnight, and which can affect your closing. So, but that's a wonderful story. Man, when COVID hit, nobody knew what was going to happen. Nobody. And I'm sure the lenders felt the same thing. Is this the end of the world? And it wasn't, but they didn't know for quite a while there. So anyways, you got the house, everything worked out well, and you got the idea. The light bulb went off. And now I think you're going to have a home run with this. I really do, because I don't see any downside, really. So folks, I want you to all take a look at fundible.ca. That's fundible.ca. And I'm going to put Jason's contact information underneath the video today, and also on the podcast comments. And I urge you to check this out, because I think this is going to be a great program for Canadian consumers. It's going to be a great program for realtors, and it's going to help everybody who's interested in real estate. So thank you, Jason. Thank you for coming on the podcast and on YouTube today. You're welcome to come back anytime you like.
Cool. Thank you, Randy.
So thanks again, my friend. Have a great day, and we'll talk again soon. Take care.
Okay. Appreciate it.
Bye now.
Cheers.